start. So I'm Peter Gordon. I'm with Payment Relationship Management. I started this company last Thursday. I left MasterCard last Wednesday. And clearly I've been thinking about this for a while because I need some help just getting this going up here. I'll start off while he's getting that up. You know, I'd say it's about 30 years of figuring this out. I implemented the first POS system at the Registry of Motor Vehicles in 1988. We took cash draws out of the Registry of Motor Vehicles in Boston, and we put in POS systems. And you know, I've gone on and I started a bank in Boston. We sold it March 1st to Brookline Bank. I've worked at MasterCard. I've managed the NICE network. I've been on this journey for a little while. I was on the one of 18 people on the steering committee for faster payments. And while this is going, it's still not up yet. There we go, sorry. Steal my thunder, whoops. So I'll just make a comment to the previous speakers that I saw a little bit. Do you guys know, when was the card system built? How many years ago? 50. The ACH network? 50. Wire network? So we talk about all these great ideas of how we're going to improve the payment systems. And I think you have to understand that the infrastructure we're standing on is 40 or 50 years old. And that's the issue. When I was at MasterCard, I was responsible. We bought a company for $1 billion called VocaLink. Now that I'm not there, I can tell you that because there's a reason why we did that. They have an infrastructure, 2022, could have been other people, but there's an infrastructure and it's all about the data. So I'm stealing some of my thunder, but I just want to say when we talk about why Alipay works or in other countries, it's because those countries have taken those specifications, typically around an ISO 20022. We can talk about what it is. And that infrastructure is regulated. So the government says, so in India, just use them as an example, they took 56% of the cash out of the system 2 years ago. So no more cash. And when they did that, they said, before we did that, they got really smart and they said, we're going to put a new bill pay system in. Someone mentioned NPCI. We're going to have a new way to transfer funds. So it's brand new. So they're building their solutions, the same solutions we have. So Apple Pay, Google just launched Tez in India. Google Tez is launched in India on top of the Indian payment network, not on the US payment network. I think people have to understand that's why they're accelerating. That's why they're better. They've reduced the friction because the underlying technology is fixed. And we can talk a lot about it. So I'm here to talk about disruption. I mentioned I started a company. I figure I only have 25 minutes, so I'll give you the key takeaways, and then we'll go through it and get to questions as quickly as possible. It's about the data. I heard a lot of the solutions that I've heard today. We've overcome some of the issues around a card transaction that is limiting with the data. I talked to one CEO here today. I think it's a great platform. He's combining card data with EOB for healthcare, explanation of benefits, combining those things. But why is he doing that? He's doing it because the underlying infrastructure is broken. So I think you have to recognize all these payments, the next generation, to help consumers, to help fraud, to help the banks, to help you as a consumer. You have to do the data. And this is, and today, it's limiting in what we can do. It's real and it's now. Real-time payments. I can tell you, I'm fortunate enough, I've been going around the globe. The banks, you may know, real-time payments. You know, so MasterCard did make a bet for $1 billion. You don't think they're talking about this at the boardroom. The folks at Citibank that I work with, they've connected to the real-time payments. But don't get too nervous because you're not too late. That's the other thing I want to make sure. You're not too late. You know, in the end of the day, there's 12 banks currently connected to this thing we'll talk about, real-time payments. There's 1,000 transactions going through a week. All right, so you're not too late. But I think you have to understand we finally have cracked the code. We're moving forward. Banks are interested. So this is the takeaway of the presentation. It's about the data. If you remember nothing else, remember it's about the data. Remember, we finally started. People have made predictions when things are going to happen. You can say, I heard Peter say, it's finally here. Transactions are happening. Banks are connected. Use cases are being developed. Folks like MasterCard, folks like Visa, they are working on these things and going there. So now let me get into the presentation, and I'll take a step back. So I had George Jetson. I had the musics before, but does anyone know when was George Jetson? When was the first episode? Anyone know? Yeah, 1962. 15 episodes were built in 1962. There were another 15 episodes that were done in 85 to 86. So only 30 episodes. They got it pretty good, the Apple Watch. You know, we're not flying around in cars yet, but Elon would have you think we're going to get there soon. We're getting there pretty good. But they didn't represent money. Was the only thing. And I would just say, if you asked Hanna-Barbera, they just didn't envision it. You know, they probably would have, but how do you show Jane taking the money from them? So I wanted to show you this. So 56 years later, this is a real wire. This is the information. So you ask, like, why can't we do stuff? So I sent a wire, a real wire. I invested in a company, $50,000. You see, it says, so it first says confirmed at the top, and then it says expected date. This is right out of my Fidelity account. Please, there's no PCI data, hopefully. Confirmation number. So it says Bank of America, New York, NA, New York. Did I send it to the Bank of America, New York? No. The company's based in Minneapolis. This is the data. This is what we're, so when I sent it to that person's account, did he get a notification that the money's at 50 grand? This is real money, people. There was no information. He had to call the bank. I want to put it in perspective. This is what we're dealing with today. And all these entrepreneurs and innovators, they have brilliant ideas, but we're working around the problem. And we're getting there. And I think it's just a good thing to put into perspective. So MIT, the era of electronic funds, EFT, is undoubtedly on its way. EFT could make it possible to issue paychecks on a daily basis and pay bills on a daily basis. It could be possible to control payments precisely for maximum benefits. Paying your taxes $11.59 on $4.15. Just inserting your credit card in an appropriate slot and pressing a button, the latest kitchen gizmo could be at your home and your bank account could be automatically adjusted. When do you think this was said? So this was written 40 years ago. Think about that. So we all know where it's going. The predictions have been there. I think we all know where it's going. And I still contend, I think it's important to understand the infrastructure's been broken. And what we're trying to do is replace it. You know, I can get all card geeky, but there's 160 characters in a card transaction. We've replenished it. There's only so many things you can do. A tweet has more information than that. And it's regulated or mandated by Visa, MasterCard where you can put that information. So we need a new fundamental infrastructure. And as Chester said, there is, like in China, the government said, this is how you're going to do it. This is a better way. So we know what to do. We're just on the path to doing it. So just put again in context. So, you know, I said I started in the late 80s with payments. I think the first phase, so this is a book I read. It's really good. Steve Case, who started AOL, wrote it about where we are in disruption. Real good book. And he basically says there's 3 phases of the internet. The first phase, some of you may not even be old enough, dialing up 24 baud modems, connecting your AOL. This is when I got into online banking. I got a CD from Citizens Bank. I put in the 5.5-inch floppy. That's how I paid bills. Online, using a 5.5-inch floppy over a 24 baud modem. You know, this is what got me into payments a long time ago. Crazy if you think about that today. So it was about connectivity. We figured out connectivity. Then the next phase is what we're, you know, all of us know, social mobile. This is where Amazon, I had 2 consultants working for me. They left and they went to work for a company called Bibliofind. Bibliofine was based in Cambridge, Massachusetts. Rare book site. It was Amazon's first acquisition. We knew what was going on. We saw these trends in that time period, 2000, 2015. So where are we today? We need to, and you're hearing my message, things need to fundamentally, the infrastructure, so when we talk about healthcare records, the reason why they don't work in cards is because you can't put an EOB, that thing you keep getting in the mail that says your explanation of benefits and the different things, you can't put it in a card transaction. It doesn't fit. There's no place to put it. You could build a system with it, but then we have a reconciliation problem. We have $500 million of reconciliation a year. Whether you're a bank, whether you're a company, you're reconciling the invoice to the payment, matching that up. There's real no reason to do that in a new digital world where you have the data, where you could put the EOB in the proper format and put it into a transaction. So I contend, and I agree with Steve Case, he wrote a book, so he must have it right. But we're in the stage of where we're going to fundamentally, finally, the things that I think MIT predicted 40 years ago, now will be able to happen. Not because we didn't think of the ideas, not because Hanna-Barbera didn't think about it 50 years ago with the Jetsons, but because we're going to work on changing the infrastructure, the underlying infrastructure of how payments really work. And I know it's a little payment geeky, and we can talk about how it really will work, but that's what it is. I do a lot of work with banks. So I think I mentioned I started a bank. I've worked at Santander. I've worked at RBS Citizens. And I talk to the banks, and they're concerned, right? Why are fees going away? This is a recent study by McKinsey. So globally, it's a much bigger number. But this is just in the U.S., $1 billion to $45 billion at risk by 2020. So they say that because payments are changing, how your consumers want to interact, what they're willing to pay for. I mean, the Chase. Who saw the Chase announcement about their new mobile app for investing? It's a race to zero, right? They're giving away free trades, 100 free trades to anyone. My 18-year-old daughter is signing up for it. She's going to invest. No minimum, no nothing. You couldn't do that. Just think you couldn't do that 20 years ago. Forget about the AML. But why? Because the infrastructure is finally catching up with it, right? The technology, the speed of the computers, the data, it's finally all coming together. And so I don't know if there's many financial institutions, but I work with them. But it's a big deal to take 17%. Imagine going to your board and like, yeah, no big deal. 17% is at risk because the world around me changing. So this is a lot of work we're doing. So I mentioned I started a company last Thursday. I've been thinking about it a little bit. And the reason is to help folks with this right now. I don't want to alarm anyone. We've seen these transitions before. We had this thing called the internet, and we had decentralized computing and centralized computing. I learned how to read hex dumps and do COBOL and do that. We went from mainframes were going to go away. Well, they're still around, right? So I don't want to be an alarmist. So what do? We just have to go back to the basics. And I think it's just important to understand what your strategy is. I hear a lot of folks in different, whether you're a bank or whether you're a fintech. Let's just start at the beginning, understand who your market is, gather where you're going, and then just have a systematic approach to get there. And we're creating what the company I'm going to show you in a few things that we're doing is just helping. I believe the financial institutions are one of the keys that have been limited. And one reason why they're limited is the people who manage them, the boards, which I was one, the regulators, there's some in the room, sorry, but that's why they're here being educated. They don't know. I just was at a $1.5 billion bank in Boston. I met with the COO, the chief operating officer, the chief revenue officer, head of commercial, and they have a payments officer. And they just finished an FDIC exam. So they're state-owned, 1.5 billion in assets, 150-year-old bank. They know if they don't do anything, they will go out of business. They say that they will know they'll go out of business. But the regulators came in and said, why are you initiating an ACH transaction for a company in Arkansas? They're like, well, that's our business model. We have this local software company down the street. We sponsor them into the network, and that's their customer. And then, you know, it goes downhill. The regulators just can't track it. So, you know, it's not the regulator's fault. It's not the bank's fault. It's all of our fault. So we need to help put in infrastructure, educate everyone, and put in the tools. You know, I say, if you teach a man to fish, you know, they eat for a lifetime. Give a man a fish, they eat for a day. So we're just trying to put in the tools that bankers expect, that boards expect. When I was on the board, we used to get a package on a quarterly basis of our loan portfolio. Regulators are really concerned about risks, a big word, right? They're having risk. Concentration risk is a big deal. So you can't have too much of anything. That's a big deal in banking. So you can't have too many two-family homes. So we were in Newton, Massachusetts, and Wellesley, Massachusetts. So where Wellesley College is and Babson College, and where Boston College is. That's where the two branches, two of the nicest, wealthiest. They were concerned about too many mortgages in those places. They're not, you know, we're not going out of business there. We only had, you know, maybe 300 mortgages, right? But they don't care. They don't want to have too many. We didn't want too many taxis, right? Too many taxi medallions, Uber, too many Dunkin' Donuts. So the same thing, apply that to financial services and payments. I don't know any bank, not even B of A, Santander, and they have a $32 billion book of business at Santander and payments. They don't manage it holistically. They can't tell you how many customers are on ACH, how many are doing bill pay, how many are doing wire, by channel, by industry cut. If you go to, imagine going to Jeff Bezos and asking him what his customer segmentation is, he could probably pull it up on his phone and he has a segmentation of what his customers are. The banks just aren't equipped, and you know, it's really about the data. So in the last few weeks, we just put together a simple, so payment relationship management came out of customer relationship management. I did some initial work I did the first Siebel implementation, if you guys remember Siebel, in 1997 in Boston. And so we just built it off that. So understanding your payments and how it relates to your strategy. So it's not rocket science. So understand where you are, gather the information, standardize it. I'm a big standards person, so I know there's a lot of, we the industry, make a lot of money on the inefficiencies, mapping from a ISO 8583 to a 20022 or a Visa send transaction and mapping it and gatewaying it to Visa, to MasterCard send to Visa Direct or whatever. There's a lot of friction in that. I'm all about, if we have a standard, which there is one out there, they use it outside the US, it's called ISO 20022. Just something else to know. I don't think it's the best standard in the world, but it's a standard. It's not the easiest to use. It's big. If anyone's actually looked at it, it's not easy to use. I'm not saying that. Don't say Peter said it's the best thing ever. But it is a standard, people, and it does work. And it's big and it's bulky, but you know what? Our technology can handle it today. So then just analyze and recommend. And so it's really about you know, being able to turn the data into actionable things. So we built a little company. Please stop by before, and I'll give you a quick tour of some dashboards we built to help banks and then businesses manage these things. So we have an analytics platform. We're doing some consulting. And just to give you two visuals, and I'm going to go to questions. So this is the end result. I think I skipped one real quick. This is just examples of some of the dashboards we built that shows to help regulators visualize. I want to get, in banks, I want to get rid of spreadsheets. No more banks, no more spreadsheets. I'm sure they'll still hit the button and download the spreadsheets, but all these will be visualization to help regulators, help banks manage their businesses. And then this is kind of the end result where we went into a financial institution. We're helping them move to an electronic invoicing and payment solution, move to real-time payments, enable small businesses. So these are some of the things. So I want to open up with questions. Real-time payments, it's here, it's now, it's about the data. It's not too late, and we're just at the beginning, but that's why we're all here. I think everyone in this room, you have a good next 10 years of exciting career ahead of you. So I look forward to going on the journey with you. Questions? Yeah?
Yeah, you
Yeah, so a great question, but there's many layers to that, and there's many regulators that you just tricked over. So the question was, well, how do I see regulation impacting where we're going, how we're doing things? So, and he asked about KYC and AML. So in the answer, that spectrum is pretty wide of what you covered. So on the AML, on the anti-money laundering front and the know your customer KYC, do I think they're getting any more lenient? Absolutely not, no. Not even, like, I think it's going the other way. The pendulum is continuing going the wrong direction, which is some of the things we're trying to help. Like that example I said of Arkansas, explaining to the regulator, that's okay. Like, we do know who they are. We do, even though they're in Arkansas and we live in Boston, they're okay. They do payments in Arkansas, it's okay, right? And educating them. So no. In terms of the more broader regulatory, yes, I do think there is some payment charters. There's one in Connecticut. Connecticut loosened their laws to do, there are some charters going through I'm aware of to do a payments-only bank. There's some fintech stuff. Someone help me out. There was a report just recently, the Treasury just, it was just last week, I'll get it out, which was really good, but they were pretty much silent on payments. They said a bunch of gobbledygook, but they kicked the can down the road. So I think they're actively, not I think, I know they're actively. Something else about our new Fed chair, many of you may not know this, so Jay Powell. Jay Powell was the, you guys know about the Faster Payments Task Force that the Fed. So he and Esther George, who was the St. Louis, who is the St. Louis president, and Jay Powell sponsored that work. So he was actively involved. I mean, before he was considered to be that. So do I feel confident that things are going to move forward and there'll be regulatory? The answer is yes. Do we have appetite in the United States to actually have any additional regulation? I don't think so, right? So I think it's good the Fed is aware. I don't think they're not aware. They're studying it, they're working on it, and they will act when I think the market catches up. But really good question. Good question. Yes?
What makes Europe, what we see, the ruling regulations, for instance, PST?
Yes.
Right, which basically does exactly that. It creates a standard which allows
Yes.
company to make weeks, less catching up. And do you see US basically standardizing with Europe on how the regulation is global?
So if I can repeat the question, I won't do it exactly, but it was around PST2 and open banking. So that's the open banking standard in Europe. And I think she said, will the US catch up with Europe? And so I think the reality is, we unfortunately Americans, you kind of know this, we don't like to follow anyone. So I think we have an issue. And because of that, so will there be one standard on open banking? I don't think for a while. I think we're actually going to be behind this for a while. And the reason is because we can't agree. Because there's we have big commercial interests. You know, in the US, people don't understand. There's probably only about 10 banks that do their own processing for banks. And then we have these big companies like FIS, Fiserv, Jack Henry, First Data, all these $10 billion plus companies. And they have commercial interests in, you know, they're trying to be open, and so that's the delicate balance in the US is balancing regulatory with commercial interests. And I think that's the journey, the next 3 years. That's why there's honestly a lot of confusion from Visa, MasterCard, from FIS, and considered closed and proprietary things. I think it's going to be, which makes a lot of opportunity for consultants and technologists. And so unfortunately, I don't think it'll be sorted out for the next 3 to 5 years, really. But then we will catch up, and that's when we will, but be a little while. That's my good question. Yes?
Just a comment to that in the Treasury report.
Yeah, that was, what was that report?
It's the Treasury, it's their fourth report, and this one's on fintech and innovation. And to the issue of open banking, it specifically says
Yeah.
that they don't recommend, Treasury's not recommending the CFPB or Treasury or Fed or anybody put in any standards, and they would prefer a private market-driven solution to open banking. So we're not going to get PSD2, and the Fed had the opportunity to.
I just want to repeat that. Did you hear what she said? Just repeating. So there was a Treasury report done. It's really good. It's like pretty thick. And they talk about open banking. They said, with payments and open banking, we are not going to opine on this yet. And I say, until they get to the tipping point, because when I talk to the Fed officials, so that's where the 3 to 5, when things are really, really screwed up, they will step in and say, this is the way we need to do it. So we have to screw it up a little more over the next 3 years. But yeah, was there another question? So yeah, that was good. I have time for one more question. Yeah, yeah, sure. Yeah.
Outside of their own four walls in terms of, again, where it's legally allowed and compliant to waste.
Yeah, Frank asked a good question. So around data, what do the banks think of the data, and how do they use it? And so, you know, GDPR and a lot of issues. So I would say that 20 to 30 banks in the United States. You know, we have 9,582 banks in the US. And so I just said 30 banks think it's really important. So we have a few others that really don't know and rely on folks to take care of that. And that's where the solutions will come from, hopefully, folks like yourself. So I think there's not an appreciation for, and I think the banks have a long way to go, certainly below the top, either a few of those unique players in the marketplace or the next 30. So with that, I appreciate it. Really exciting to be here. We're all around for a really good journey over the next 3 to 5 years. So thank you.